Alphabet, or Google stock, was higher after hours when they reported better than expected quarterly results, driven in part by the growth in their cloud segment. A lot of folks are saying these were great results, but were they really? So in this video, I'm going to walk you through Alphabet's latest earnings, my thoughts around the results, along with my thoughts on Alphabet's current valuation. Where do I think Google stock can go from here? If you enjoy educational investment videos, please make a point of hitting that subscribe button. So let's dive right into understanding what is going on with Alphabet stock. You're watching Unrivaled Investing. And so looking at their results, you can see 7% revenue growth in the most recent quarter. Adjusting for the changes in the US dollar relative to other currencies, they'd say their growth is closer to 9%. Looking at expanding profit margins from 28% to 29%. And looking at diluted earnings per share increasing nearly 20%. So this is where folks might say, wow, this is great for a company like Google, a $1 trillion company, to be posting nearly 20% earnings growth. I mean, that is something where a lot of people would say that's great. But now let's peel it back a little bit. Let's actually understand what's driving their results. And so when you look at their results, you see Google advertising actually isn't growing that fast. And keep in mind, this is where most of their profits come from. 3% growth, 5% growth in search, 4% in ads, a 5% decline in their Google network, which is effectively empowering third-party websites with advertising. You look at these different things, this is not great. Now, they would point to a weaker economy that's sort of holding back this ad spend. Okay, so maybe that's what's really going on here. You look at Google Other. This is including the Google Store. This includes hardware. This includes YouTube subscription revenue. This is doing nicely, 24% growth. You look at Google Cloud. This was doing really well, 28% growth, the best growing real division here. And they also reported their second quarter profitability. Now, that was partly an accounting adjustment because of how long they depreciated the servers from, let's say, 4 years to 6 years. And if you say, hey, these servers actually last longer than we previously expected, then you could say now it's actually generating profit. So when you're looking at profits, really all their profits come from Google services, which is mostly advertising, versus Google Cloud, which is just starting to be profitable. So looking at this all in, you're looking at revenue growth of 7%, and then you look at their costs, like their change in employees, and this grew less. And so this is the real reason why you're looking at Google posting, stronger than expected earnings for a lot of folks, is you're saying, oh, well, if you're growing, let's say, sales by a couple percent, let's say between 5 and 10%, and you only grow your expenses by 3 to 5%, then your profits grow even faster. And so that's what you're seeing here with Google, where they posted, what I argue is a very, very solid second quarter 2023 results. Now, you are seeing some changes with management, with Ruth Porat, who is their great CFO. She's been the CFO since May 2015. She's transitioning over to the Chief Investment Officer of Alphabet, which is an interesting development, given that Alphabet has effectively, around $150 billion investment portfolio. I personally, keep my spare cash at Interactive Brokers, where I'm getting, a 4.5% yield. But if you can have a dedicated investment officer, at Alphabet, and they can say, hey, let's generate an extra 5% a year, on top of whatever they can get for cash, that alone pays several $1 billion. So, I know a lot of folks, think Google, $1 billion there, $1 billion here, it's not a big deal. But that, could help tweak investor returns. So I'm very curious how this role develops for, Alphabet. If you're interested in that link about Interactive, see the link below. But looking at what they're talking about with Ruth Porat, they talk about how she's also responsible for Alphabet's investments in their other bets. So maybe this is about cost management or making sure their other bets turn out well. And this is going to be a slow transition from the CFO role, because she's still running the company's 2024 effectively long-range capital planning processes. So this is really just holding the hand of Wall Street to say, don't worry, don't fret. Ruth Porat has historically done a very good job managing costs and, calling things out. Don't worry, it's not going to be one day you wake up, oh, she's not the CFO. This is a planned transition. So don't worry about this. Done really well, expertly done. And then also news over the last few weeks is seeing how Sergey Brin, the co-founder of Google, he's back, and he's been working in the trenches with fellow AI researchers to help make sure that they stay relevant, that they don't lose the AI arms race. And they're going to be launching an exciting, powerful new system called Gemini later this year. I'll have a video on that when it comes out. But this gets to the uncertainty of, OpenAI threw down the gauntlet with ChatGPT 4 in the past year. That really surprised a lot of people with how powerful it was, especially given the fact that the models themselves were based on research concepts that Google first published. So Google published it, they put the idea on the shelf, and then OpenAI said, oh, thanks for the great idea. Let's roll with it, and let's get 100 million users. The first product to reach 100 million users in like a month or two. Just incredible. And incredible what they built. And the fact is that Google Bard still isn't as good as what they built with ChatGPT 4. So that is the open question of, well, how does this shake out? I personally use, ChatGPT 4 increasingly, when I'm doing my, research. And if I want to look at an individual stock, I use AI ticker chat. See the link below for that as well. Also, there's a free 1-month usage, in terms of researching stocks, where you can now take SEC documents and put it into, ChatGPT or the AI of your choosing. Once again, using AI ticker chat. And so it's interesting to see, like, this whole world is changing very quickly with the development of AI. And, I look at this and I'm thinking, where does Google or where does Alphabet stock go from here? First of all, in full disclosure, this is not financial advice. I do own a position in Google stock. It's not very big, tiny position. And a quick plug that I recently bought more of a stock that I think has over 300% upside potential that I called out to my subscribers at unrivaledinvesting.com. So if you're looking to take charge of your investment journey with compelling ideas, market insights, and an exclusive Discord community available for annual subscribers, come check it out. Once again, that's unrivaledinvesting.com, link below. I also have educational materials for those that are interested. Looking at Google's latest results, year to date, they've generated nearly $40 billion in free cash flow. So no matter what the concerns are about AI, a revolution, this is still a cash cow. They are still doing extremely well. $40 billion in free cash flow just so far this year. Looking at their valuation, the stock has gone up a bit, but I'd still say it's very reasonably valued. And I'd still say over the next 5 years, you could get somewhere between break even and, let's say, upside of, let's say, 100% over the next 5 years. And keep in mind, this is not only, I'm using market multiples roughly for their Google services, a premium for Google Cloud because it's growing so nicely. And, I'm assuming profit margins for Google services stay roughly the same. And they have sizable amounts of cash that, as I just alluded to, that $40 billion during the first half of the year that they can return to shareholders. And so far we have been seeing that, and very rough math. If you have a company at 20 times free cash flow and they return all that cash flow to you via buybacks, you're effectively buying back 5% of the stock each year. Then if you offset it with some, employee compensation, maybe it's only 3.5% dilution. And that's effectively what you're seeing with Google right now, with the share buybacks, reducing the share count by 3 to 4% in a year. So you're looking at not a super crazy valuation. It's not a hyper rich valuation. I'd argue it's very reasonable. And I personally wouldn't be surprised if Alphabet stock, let's say, outperforms the S&P 500, let's say, over the next 5 years. I think it's very reasonable. I personally would rather put my bets on things where I could say, hey, I think there's a lot more upside potential, but it's very reasonable. I personally, was looking at it and you could say that this was a mistake. I was previously looking at it earlier this quarter and I was trimming what was already a small position in Google at lower prices. So you could say, Daniel, man, what a mistake. But, I'm not focusing on just, 1 quarter or 1 month, in terms of price movement. I'm focusing on the long-term story. And when I think about the economic cycle, the credit cycle, and I think about what's been going on with the Federal Reserve, the tightening monetary policy, I think the economic bill hasn't been fully paid by the Federal Reserve continuing to tighten. Maybe they continue to tighten tomorrow. And given that, roughly 80% of Google's revenue comes from advertising, that's part of the reason why I was trimming earlier this year, thinking if there is a true economic contraction, you haven't really seen it in Google's results yet. You've seen, economic pressures, and that's the reason why their advertising business is only growing 3%, but 3-4%. But if you have a real recession, which we haven't seen, then I think you get Google at a lower price. It's because 80% of their revenue and nearly 100% of their profit comes from advertising. And I think another key aspect is the revolution in AI. And I've already alluded to it and commented about it, but here it is, Demis Hassabis pioneering their AI research with DeepMind. He's the founder of DeepMind. DeepMind's part of Google. And he did this long interview, which I encourage you to check out. But he had this one quote where he said, today's chatbots like ChatGPT-4 will look trivial by comparison to, I think, what's coming in the next few years. And he's not talking about 10 years from now. He's talking about the next couple of years, 2 years, later this year, 3 years. And I think he's right. And that's the part that puts me at unease or thinking about Google search, where I keep thinking more and more people are going to be using some sort of artificial intelligence to be asking questions, sort of like a super smart Ask Jeeves, and once again, I'm already using this for my, for my stock research, partly with AI ticker chat. As I mentioned, see the link below where you can now quickly use ChatGPT to interact with these documents. So I think you're only going to see more and more of that. And I think the AIs are only going to get better. And so I'm looking at this and I think he's right. And I think he's playing with even cooler tools than people have seen. And so the existential risk to Google search business, it's still unclear to me. And that's part of the reason why I'm not assuming a super high valuation multiple for their search business, let's say 5 years out, because I think the market is dynamic and there's a real risk that they could face much higher costs for their search business. They've alluded to the fact that some of these generative AI driven searches now, are effectively 10x more expensive than their legacy. But it's super early days in this search market. So we haven't really seen that impact in terms of cost. So it's just so early on. Now, so far, clearly my concerns have been premature, generating $40 billion in free cash flow year to date, trimming at a lower price. So you could say that was a mistake. Would I say that these were great results? No, I would not say these are great results, but I would also say I'm personally focusing my personal portfolio on, let's say, smaller positions where I could more comfortably pencil out on an upside situation several 100% versus just saying like, oh, maybe this has 100% over the next 5 years. But we'll see. We'll see how this plays out with Alphabet stock. There's a lot to love here. I love the rich cash balance sheet. I love the tens of billions of dollars in free cash flow. I'm aware of the economic cycle, and I don't think that the bill has fully been paid by the Federal Reserve. Keep tightening. And so I suspect at some point, you see a recession, in which case Google's results get hurt, in which case you could probably get Google stock for, a greater discount or a sale. And that was part of my thoughts that were, that I was considering earlier this year when I was trimming at lower prices, which once again looks like a mistake at this point, but we'll see. We'll see how this plays out. But I'm also, looking to move my capital into things where, and this is my own personal journey talking about, where I want to find things where I'm focusing on, could this do 200 to 300%, let's say over the next 5 years? And that's tougher when you're talking about, a nearly $2 trillion company. Is this really going to be, a $4 trillion, $6 trillion company? Maybe. But when you're dealing with these sort of existential risks, it increases the likelihood that that doesn't happen, in my opinion, until you actually start seeing revenue growth reaccelerate for the rest of the business. So we'll see. If you have a different opinion on how AI will impact their search business, I'd absolutely love to hear it. Google clearly does have many advantages, including cutting edge AI, including having several products. They have something like 15 products with like 500 million daily users, several products with 2 billion daily users. So that is an edge. That is a distribution edge where even, in theory, maybe they don't even need to have the best AI, but maybe they just roll out something that's 90% as good as someone else, but because they already have those relationships, and that includes the marketing relationships as well, all these advertisers. So there's a lot of different dynamics. That's part of the reason why I still own a stake in it, but it's not a huge stake for me personally. And so far that's been a mistake seeing this rally. I'd love to hear your thoughts in the comments below. Thanks so much for tuning in to Unrivaled Investing.